Have you ever wondered what it takes to be the biggest player in the multifamily real estate market in Canada? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. Today we're diving into a significant development in the Canadian real estate market. Canada's largest apartment owner, Canadian Apartment Properties Real Estate Investment Trust, or CAPREIT, has embarked on a strategic repositioning of its portfolio. As reported by CoStar News, CAPREIT has made an impressive $297 million worth of deals, signaling a substantial shift in their approach to multifamily real estate. CAPREIT is acquiring 5 multifamily properties, which include locations in Regina, Saskatchewan, and London, Ontario, among others. This move is part of their strategy to upgrade their portfolio with newer and more premium real estate assets. At the same time, CAPREIT has sold 2 properties, although the details of these sales were not disclosed in the report. This decision by CAPREIT highlights a broader trend in the real estate market towards acquiring premium and modern properties. Such strategic moves can enhance the value of a portfolio and attract a higher caliber of tenants, which is crucial in maintaining competitive advantage in a rapidly evolving market. It's worth noting that these acquisitions aren't just about expansion, but about repositioning CAPREIT's portfolio to align with current market demands and future growth opportunities. This kind of strategic foresight is what sets successful real estate investors apart from the rest. It's an exciting time for the multifamily sector, especially as we see major players like CAPREIT making bold moves to strengthen their market position. Patrick Sisson from National Real Estate News reports that the ongoing federal government shutdown in the United States, now entering its 5th week, is starting to have a significant impact on the multifamily real estate market. As the shutdown continues, multifamily owners are particularly concerned about the upcoming November first lapse of the Supplemental Nutrition Assistance Program, which could lead to further economic challenges for both tenants and landlords. If the shutdown persists, funding for Section 8 housing vouchers is expected to run out, raising concerns about potential missed rent payments in December. Nicole Opano, Assistant Vice President of Housing Policy and Regulatory Affairs at the National Apartment Association, expressed real concern about the potential impact on rental housing and the renters served by these programs. The shutdown has already started to affect the affordable housing pipeline, with delays in new projects and limited funding options becoming more pronounced as the impasse continues. Rebecca Simon, a partner at Nixon Peabody's affordable housing practice, noted that the Department of Housing and Urban Development is operating with only a quarter of its usual staff, leading to a slowdown in processing and deal pipelines. The most immediate impacts on the multifamily sector stem from workforce reductions, bureaucratic freezes, and reduced funding from HUD and the Community Development Financial Institutions Fund. New loan processing via HUD has come to a halt, and federal housing inspectors, who play a crucial role in maintaining the quality of affordable housing, have been let go. This has caused significant delays for developers who rely on project-based vouchers and guaranteed government income to underwrite affordable housing projects. Lisette Calderon, CEO of Neology Group, expressed anxiety over the challenges posed by the shutdown, particularly in relation to the entitlement process and federal agency interactions. She highlighted that these delays can pose significant challenges, especially for projects requiring Federal Aviation Administration authorization or facing air traffic controller shortages that have even impacted site visits. Rebecca Simon warned of a chilling effect across the industry if the shutdown is prolonged, complicating the year-end rush to close affordable housing deals. This is particularly concerning given that HUD was already operating with reduced staff prior to the shutdown, meaning the backlog of work is only growing. If the shutdown continues, it could disrupt the traditional funding mechanisms for affordable housing, such as low-income housing tax credits, putting many projects at risk of falling apart. Kim Johnson, policy manager at the National Low-Income Housing Coalition, pointed out that the absence of SNAP payments will not only cut food access for millions, but also place economic pressure on tenants and affordable housing operators. If Section 8 voucher funding runs out, it could lead to a cascade of missed payments, potentially resulting in evictions. This would be especially challenging for smaller and medium-sized family businesses that may not be able to sustain such losses. Patrick Sisson's report underscores the urgency for developers to factor in delays in their project timelines and prioritize deals with expiring funding sources once the shutdown ends. With looming cuts to social safety nets, there is a pressing need for the government to resolve the shutdown to prevent further disruptions in the multifamily housing sector. It's a challenging time, but with strategic planning and a focus on securing necessary funding, the industry can navigate these difficulties. In the latest news from the multifamily real estate sector, West Shore, a prominent real estate investment firm, has made significant strides in its expansion efforts across the southeastern United States. According to a report by the Boston Real Estate Times, West Shore has completed two major acquisitions, adding Palm Beach Gardens Apartments in Florida and Ironwood Apartments in South Carolina to their portfolio. With these acquisitions, West Shore now owns and operates more than 18,500 multifamily units nationwide, showcasing their continued commitment to growth and excellence in the industry. The acquisition of Palm Beach Gardens Apartments is particularly noteworthy. This 542-unit community is West Shore's 18th acquisition in Florida, bringing their total holdings in the state to 5,852 multifamily units. Located at the intersection of PGA Boulevard and North Military Trail, the property offers residents easy access to major highways, airports, and the beautiful Florida beaches. The community features a range of upscale amenities, including a resort-style pool, 24-hour fitness center, and even a putting green. This acquisition aligns with West Shore's focus on high-quality assets in thriving markets. Further north, the acquisition of Ironwood Apartments in North Augusta, South Carolina, adds another high-quality property to West Shore's portfolio in the southeast. Ironwood offers modern living with studio, 1, 2, and 3-bedroom apartments, featuring granite countertops and stainless steel appliances. Residents can enjoy a resort-style saltwater pool and a 24-hour fitness center, among other amenities. Its location near SRP Park and the North Augusta Greenway provides easy access to outdoor recreation and local shopping, making it an attractive option for residents seeking convenience and quality. Stephen P. Rosenthal, chairman of West Shore, emphasized the importance of these acquisitions in reinforcing the company's position as a leading private multifamily investment firm. With a portfolio now exceeding 18,500 units, West Shore continues to focus on strategic acquisitions, long-term value creation, and operational excellence across some of the fastest-growing markets in the United States. This is a testament to their disciplined growth strategy and commitment to delivering strong returns for their investors. These strategic moves by West Shore not only highlight the firm's ability to capitalize on high-demand markets, but also underscore a broader trend in the multifamily real estate sector. As companies continue to expand and reposition their portfolios, the focus remains on acquiring premium properties that offer both quality living and investment potential. This is an exciting development for the industry, and it will be interesting to see how these acquisitions impact West Shore's growth trajectory in the coming years. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.